Do and Jesse. We are here. Ask us anything. The Cash Compound is back in 2024. Cracking the code to cash flow. What's up, Josh? You out there? What's up, Josh? Josh Rose? Janelle Thompson, I don't know you, but welcome. But Josh, what's up, Miss Sensual? What's up to our family and friends out there on the Cash Compound, TikTok as well, and our YouTube family? Jesse, Happy New Year to you, man. Welcome back.
Happy New Year. And to everybody else, Happy New Year.
Okay, ladies and gentlemen, what we do here, as I mentioned, our mantra is crack the code to cash flow. You can follow us on several different social platforms and channels, IG, YT, TT, anything you want, and we're here for you. What we're going to do is walk and talk you through what we call the save and spend system. How to save your money and spend someone else's. That's what's going on. It's actually a lot more technical than that, but we don't want to confuse you. We want to help you, right, Jesse?
That's right. Simple.
Jesse, I'm gonna need you to say more than one word. I've given you a layup twice, and you've said one word.
I figure you're just giving everybody a minute to come in because we got so many different venues.
Okay, so what's up, everybody out here? I don't know where it looks like it's right here. Everybody out there on our The Banking Bros IG, what's up? Over here, we've got our YouTube family at the Cash Compound, I believe. Over here, the TT family, TikTok.
That's right.
We've even got our Zoom audience out here. And
folks there, too.
It looks like we've got an iPad who's joined us on Zoom today.
Hello, iPad.
You're the only one who's going to be able to see some of our visuals today, because if you want to join us on these Thursday calls on the AMA, the Ask Me Anything, we do have a Zoom registration for you. And if you pre-register or join the Zoom while we're here, we do have visuals. We got videos, we've got examples, we've got illustrations, and all the things that are going to help you see what we're saying. So thank you for being here. Our TikTok family out there. What's up, Jerry? Okay, not too many people on TikTok right now, but if you see something that you like, double tap on the screen. Give us a heart. If you like, learn, or love something. Top left corner, follow the Cash Compound, and bottom right corner right there is where you can share this information as well. I'm trying to throw that oop to Jesse. Now, that's how you spell a female Jesse. Everybody knows that, Josh. A male Jesse, right?
Yeah, no, I still get family members that will put the I in my name, but just Jesse.
They need to put some respect on it. Okay, we're going to have Josh definitely as a guest on one of these very, very soon as well. Josh is a great dude. He is in the game as a broker with his first set, correct me when I'm wrong, first set of IBC policies last year in 2023, 2 or 3 or 4 policies, several different policies. We met him in Arizona, and he's a part of the Factum Financial team.
Okay, fantastic.
And he is you're in Kansas City, right? Moved to Kansas City in the last couple of years. All right, so correct me when I'm wrong out there. Now, what we're going to do on this version of the Ask Me Anything, what we do every Thursday, 3:30 Eastern time, we're in South Carolina right now at the studio, is today we are going to walk and talk through what we call the Banking Book Report. Everything that we talk about here is based on what I keep calling the field guide for infinite banking. And that's Nelson Nash's bestseller and classic. It's a thriller out there, ladies and gentlemen, a financial thriller. It's called Becoming Your Own Banker. Everybody put BYOB in the chat. BYOB in the chat, 5th edition. He released it in 2001 or so after coining the term infinite banking concept in 1981. He discovered something that was missing in a personal financial experience for most Americans, but it was already ready. You remember any of those commercials back in the day when we were in high school? Already?
No.
Okay. It was like
maybe it's an age difference thing.
No, we're like 1 year apart. It was like for these like daiquiris or something. But already was what I mean is whole life insurance, the product from which we produce the tool for banking on a personal level, has always been like this. It's always been leverageable. And we show that often in the 3-cup setup. Jesse, why don't you walk and talk us through the 3-cup setup for just a second so everybody kind of knows what we mean by that.
Sure. So with 3 cups, the first cup is adding scale to what you just said about whole life insurance. What Nelson did with his Becoming Your Own Banker book is he added scale. So people that want to become their own banker, people that want to have more financial freedom and autonomy, they start thinking about a significant to them, respective to them, amount of their cash flows that they want to put in cup number 1. They want to pay premiums into that whole life policy that's been structured for banking. Okay. And of course, it creates what everybody already knew about whole life insurance. Cup number 3. Let me jump to the other side. Cup number 3, which is the death benefit. Everybody knows whole life insurance equals guaranteed death benefit. But when you start thinking about things like banking in Nelson's book, and you start thinking about, well, what if I did pay significant premiums? Again, significant respective to you. But if I paid significant premiums, and if this policy were properly structured, cup number 2 in the middle is going to be a cash value, a high cash value that you can use for the things that you want to do in life.
I love it, ladies and gentlemen. So that is the 3-cup setup that explains the product that we can sustain for the process. A whole life insurance policy, believe it or not, is going to be there for you, guaranteed for your whole life. So if we give an insurance company premiums and put those dollars into a policy, it's going to buy us death benefit, cup number 3, but cash values, if I can use the term, equity of the death benefit. The insurance company's on the hook. They're on risk for that death benefit starting day 1.
Guaranteed.
God forbid you died day 2, they'd be out of luck. Your family would be covered and taken care of. But cup 2 is how much of that total they've had time to pay off, pay up, and pay for, so you can have equity. We're going to leverage those dollars. That's what infinite banking is all about. It's what you can do with this policy. The policy is so misunderstood. We spend a lot of time talking through it.
Yep.
We really do. Helping educate folks here far and wide on that product, but it's really about what you can do. Becoming your own banker is what the process is going to afford you. It's going to, as my friend Dr. Tom Wall said, a PhD in retirement last year, it gives you permission to spend. Permission to spend, yeah. Okay, so we're going to now talk. We're not going to actually watch this video. We don't have very many folks who are on our Zoom, but shout out to the folks who are there. We do have a guy named iPad. He can see this. But
Perfect.
Jesse, why don't you tell us about the 5 rules in the infinite banking concept world? What rules? I don't like rules. I want to be free, financial freedom. What is this?
That's okay.
Say?
I'll use a different word because we've kind of technically already spoken some about the product, the whole life insurance policy that people know about, right? Well, I would call them the 5 principles of IBC. Okay,
all
so
right.
that'll get us off of rules for you.
Okay.
So Nelson, in his book, he lays out 5 principles that he suggests that we all consider. The first being thinking long range. Now, the way I think is helpful to consider these for your own self is, well, just ask yourself, would I rather do the opposite?
Do you have an IBC
Because if you'd rather not do the opposite, then doing the right principle is going to make sense for you. So when he says think long range, the opposite of that is think short range. I would say that in our culture, that in the financial world, people are told to think too short term. We're in that microwave mentality, that microwave mindset of instant results, get rich quick, and that's not what we're about. So I think thinking long range is very beneficial.
What's up, Ms. Flesher? What's up? I know her. We're friends. I didn't know you followed us here. So welcome. What we teach on this channel is how to save and spend money at the exact same time. We're church buddies.
Fantastic.
Right, yes. And somewhere in there, she started stalking us. All right. So if you're still out there, what's up? Say hello.
Hey, it's like any good church. You're everybody's welcome.
Right. Everybody come on in. But Jesse was just getting into the 5 principles behind the infinite banking concept. And this is what we call how to save and spend money at the exact same time. We've been doing it. We personally practice this. And so we're going to help you guys understand the 5 principles, the 5 guiding rules or whatever. And if you're on our Zoom experience or you want to register for that in an advanced Thursday next week or the week before, you're going to see this on the screen. So go ahead and come
every
back with
Thursday, 3:30.
Let's go. Okay.
Eastern time. That's
so jump back into it.
Think
and tell us where we are.
Think long range. So think about save and spend like we talk about in our system here. Well, am I always going to want to have money that's saved up that I can get to? Yes. Long range? Yes. And in fact, I would say that probably as time goes on, we're going to want access to more capital. We're going to want access to even more money. So it just makes sense to adopt the principle, the philosophy of thinking long range. And same thing on spending then. Are we going to spend more money in the future? Yes.
Well,
okay.
According to inflation and the way my kids are eating, yes, I always want access to more capital tomorrow. And that's funny. If I can interrupt you for a second,
Please.
There's so many people who play this nest egg game approach to their savings or retirement. Now, we're not talking about retirement. That's the first time we brought it up today. We're talking about cash flow. And that's very important because cash flow is required if you're retired or not.
Absolutely.
And no matter what, I wish and want a little bit more cash flow. It's always needed. It's going to be necessary in the future to have cash flow over a nest egg any day. So how much do I need in the future? How much do you need in the future?
A lot
more. I'd have no idea. And it's crazy to predetermine an amount. Who are you or who am I to say this is how much I'll need in the future? I have no idea.
Get to $1 million and you'll be okay.
Yeah,
Plenty would say.
Get to 5 million and I'll be, I don't know, right? So Jesse, I love that. So we can't be afraid to capitalize because in this system, every dollar we put in is going to be guaranteed to grow and cash flow for us. That's what I always say. Okay, so we've got a couple questions and comments and thoughts out here. I'm going to read one from our Instagram audience right now. So appreciate you, Rach. All right, you remember you can follow us at The Banking Bros on Instagram. We've got a live audience there. Rach says, can you run a real-life scenario with real policy and product examples on how to get to a point where you have a certain amount of policy value available for loan? Let's say $100,000. Rach, appreciate you. Great question. Yes, we can. Number one, we've already built you a mock scenario in our overarching guiding video. We have a presentation for you. We want you to see it. Okay. It's not going to specifically answer that question. I'll do my best here verbally in 2 minutes. But if you click the link in the bio wherever you are out there or go to saveandspendsystem.com, ladies and gentlemen, that is where you are going to find that video presentation, the Save and Spend presentation. And we built you a scenario where you can see access to cash value capital immediately. It always goes up. It always gets bigger. If you use it like a bank, it's going to go faster than the guarantees on that paper. But you can go there, Rach. Appreciate you. Ryan, I'm sorry. If you are not showing this to our audience, go ahead and, yeah, I saw it pop up there for a second. Okay, so I think that right now means just our YouTube audience can now see it as well as our Zoom audience. Appreciate everybody being out there. Okay, so Rach, we're down to 1 minute. I'm going to go quick. Okay, remember, Rach, that when you put dollars inside your own banking system, that's how we orient your mind for this process. It generates all the money. So whatever dollars you decide to put in to get the thing started is going to help determine how this thing grows and flows. When we're talking about banking normally and depositing in banks, you like deposits, don't you?
Yes.
Okay, so let's put some numbers in the game. You pick those numbers, and we're going to be able to borrow against the equity that we have so far in our death benefit. So that means I can't tell you numbers until you start to tell me some numbers, right? We're going to have to put some dollars in the game. It's going to buy a bunch of the insurance company's money, and we're going to be able to leverage that in cup number 2, as we always say, cash value. So we'd love for you to see our video that we've already built. We're building a new video presentation with bigger numbers, and it'll be closer to Rachel's example that she wanted actually very soon. Anyway, appreciate the follows. Please follow us as well if you're not already following. Maybe on Instagram, you can only see this if you're following. I'm not exactly sure. But we got a lot of friends on TikTok. Double tap on the screen if you like, love, or learn something, and click right here and follow the Cash Compound. We're teaching you how to save and spend at the same time. Jesse, keep it going. Give us the next principle or rule for the infinite banking concept.
Yep, and you already referenced it one time, which was don't be afraid to capitalize. So again, if we are thinking long range, if we do adopt this idea of saving and spending money at the same time, well, how much do we want to have access to in the future? A greater amount than we have access to today. So we can't hesitate to be planting seeds today. You know, it makes me think about that saying about the tree. You know, when's the best time to plant a tree? Well, 30 years ago or something like that.
Oh, yeah.
But the next best time is today. I mean, why would we wait until tomorrow? So the better you can wrap your mind around a significant portion, again, relative to you, to your situation, to your circumstances. And that's why we have our free consultation calls where we can talk through those things, look at your financial footprint. But the quicker you can wrap your mind around a significant portion or percentage of your cash flows going into this private banking entity, the better off you are because you're capitalizing sooner rather than later.
All right. I love it. Okay. So the next piece, the next principle from the Becoming Your Own Banker book is probably the one that is most jargonistic. All right.
Sure.
Out of the 5 principles, remember, we're about to hit number 3. Thanks for jumping in and joining us. Couch CEO. Appreciate it. Stay on the couch. We'll teach you everything you need to know. Ain't got to move today. This one is the toughest one to understand, I think, when it comes to the example Nelson Nash gives in the book. Not because it's not universal, because Nelson is going to use a grocery store as his example. But it took me a long time to understand cash flow, circular cash flow, and how it works in the marketplace. So help us understand the scenario, the context in which Nelson used it, Jesse. We've got to understand number 3. It's also the one that I messed up when I first got a policy. What is principle number 3?
Sure. So it could be titled Don't Steal the Peas. It could also be called Be an Honest Banker, because we're talking about banking. We're talking about your own private save and spend system, okay? We're going to be banking. We're going to be financing with this system. But we could just as easily be talking about a grocery store. So if you can see me on any of these platforms, I like to eat, okay? Yep. So that's a scenario, though, where you could be both a consumer, like I'm a consumer of groceries, but also you could be an owner. You could own a grocery store. So he talks about, hey, if you were a grocery store owner or you're thinking about becoming a grocery store owner, you would be thinking long range. So that was rule number 1. Okay. You would be capitalizing something. That's rule number 2. And then once you did those things, you had a long range vision, you begin capitalizing, you ought to be honest with yourself. You would never take a can of peas off the shelf and walk out the back door. Because if you did, what's your wife going to do? What's your cousin going to do? What are the employees going to do? And then the customers, I mean, everybody. Okay. So again, here's where I think asking yourself the opposite is very beneficial. Who wants to be a dishonest anything? So if we want to be profitable, if we want to have success with our grocery store, we want to be an honest grocery store owner. We're going to actually pay for our own peas. Why? Because we have this grocery store. We expect everybody to pay for the peas.
We should too. Yeah, it was tough for me to understand what that meant exactly. And let me break it down specifically in the way Nelson talks about it in the book. Remember, we're referencing Becoming Your Own Banker, 5th edition. And we've got these principles up on the screen to our Zoom audience. Feel free to click the link and register for next week so you can see our visuals as we teach you new principles. But when I saw this, Jesse, and I tried to imagine it in my mind's eye, what my struggle was, it was trying to understand how you're profitable in a business environment. That's what I did not understand. Don't steal the peas. If you own the grocery store and your wife comes to your grocery store and takes groceries out of the back, she doesn't check out in the front. She doesn't pay for them. She steals them. Doesn't that right there help you understand that we're going to be less profitable? We bought the peas wholesale, right? We bought 1 million peas from the pea farm, right? And we now gave them away for free. They were stolen. We're not going to be as profitable in this business because we took them and stole them. I had a hard time understanding how we are profitable by paying for them. That's what I missed. Well, how would you break that down to a person who's new trying to understand how this works? How do we get profitable if we have to pay for them out of our pocket? And when people get their own policies or they're considering getting their own policies for infinite banking, they always say, well, how much will it cost? How could I possibly make money if I have to pay for the policy? Am I losing money? I have to be losing money to pay for this policy. Help us understand that in the context of this grocery store.
Right.
That's what I missed.
So if just one can of peas is stolen, Nash says in his book, maybe it represents whatever he says, 40-something cents, 50-something cents, okay? But you got to keep in mind that maybe you're only making 1, 2, 3 cents per can. So that one act of being dishonest, that one act is eroding away at multiples of profits that you could have experienced. Just that one error, that one mistake.
Right. It took me so long to get, but keep going.
Yep. So you do want to be honest for being honest sake. You do want to be profitable. That's why you started the grocery store. One bad choice can eat into a lot of your profitability. At the end of the day, then, everything is financed. Either we pay credit or we pay cash for the things that we want to do. So if we do decide, okay, first, I don't want to pay interest to someone else. Okay. But then not only do I not just want to pay cash for things, but I want to be profitable. Grocery stores, they won't be in business if they're not profitable. We want to be profitable in everything we do. So the save and spend system allows us to pay cash for things that we want with a death benefit, with growth, with compounding, with guarantees, with an entity where we could recapture interest that would have gone to somebody else.
I love the explanation, and it's true every single time. I think that the 3-cup setup, what we normally use for our visuals, is so helpful, Jesse, to help people see it, literally see it. And that's what's really, really important. All right, bruh, it's Ant over here on Instagram has got a question for us. Hopefully you're still out there, man. Double tap on the screen, let us know, wave hi or something like that. But I'm going to answer this question. Can you explain the accelerated death benefit?
Okay, and then I'll have one queued up here on the next one.
Yep, shout out to everybody. What's up, Staley out there on YouTube? We got some folks in here. New dude just joined, James. Oh, somebody keeps getting knocked out. I'm so sorry. I'm going to have to give this guy a shout out because he keeps getting knocked out and coming back in, but
appreciate the persistence.
Yes, this is like his 4th time trying to get in. Okay, so bruh, it's Ant on IG. What's up? Can you explain the accelerated death benefit? Yes, one of the properties of life insurance at many, many companies has a rider, has an option for you that's really, really helpful. It's not helpful to them. It's very helpful to the consumer or client. And it's called accelerated death benefit. It's not on every policy. It's not at every company. But let me explain what that means. What it means is that 3rd cup, if you know us in the 3 cups setup, if you see some of our TikToks out there, you'll see me with 3 cups a lot. The death benefit, what's guaranteed to pay out to your family or friends or churches or charities, your beneficiary at death, it can actually come to you, not as a loan, but as a payout before you die. It can. And there's some scenarios in which that is possible. And they basically are critical, chronic, and terminal illnesses. If you potentially get that dreaded doctor's note that says, hey, you've got 12 months to live or less, or 6 months to live or less, or you cannot perform 2 of those ADLs
or whatever.
ADLs, those things that are the
everyday things.
The everyday things. Going to the bathroom, feeding yourself, getting up out of the bed, going to and from the bathroom or the table, that type of thing. You guys know what I'm talking about? If the doctor says, yeah, this person, car accident, debilitating life event, stroke, something like that, then they will advance you death benefit. The idea is you might be dying early. It's all over now. A lot of problems are part of your physical life at this point, or even cognitive. They will give you a portion, maybe up to 70, 80, 90%. Sometimes it depends on the state you live in. There's only a certain amount they can give you, but they'll give it to you without being dead. That's what that means. Bro, it's Ant. Appreciate that question out there. Those benefits, sometimes called living benefits inside of whole life or permanent insurance policies, are automatic at several of the companies we broker with. You don't have to pay extra for them. They don't cost anything. You don't even have to tell us. It's already built in. So if you get that chronic, critical, terminal illness, depending on which company and state you live in, you're going to be able to get that money in advance. God forbid you get hit by a bus but didn't die, the insurance company will start sending that death benefit early.
Yep, love it. That's a good particular question. I had one over here that I liked. Someone was asking, I believe, Will, I want to give credit to where credit's due. So is there a scenario where IBC would result in a negative return? So I appreciate IBC particularly being put in there because, again, whole life is the product. IBC is the process. Okay, so a couple of things. Number one, let me talk about product. You just asked about a return. So if somebody's paying premiums into their policy, it grows, it compounds, it never goes down. The death benefit goes up. The cash value goes up, okay? That's product. Now, we do teach and encourage people to use these policies for things that they're going to do in life and be an honest banker like we're just now talking about, and that's going to grow and expand the policy as well, okay? But to answer your question on the process side of things, could somebody who's quote unquote implementing IBC have a negative experience? Sure, even if they are following these rules. Let's say I'm knowledgeable in a particular area of investment, okay, or business, and I decide to leverage some of my cash values for some aspect of growing or expanding or scaling my business or taking on some investment. Now, the policy just does what the policy does. Growth, guarantees, that's what it has, okay? But how I use that capital, could I, if I use it for an investment, experience a loss? I sure could, okay? And at the end of the day, the way that I look at that is, of course, you should be doing things that you're knowledgeable in, places where you have skills and experience and background, okay?
Definitely.
This is just something that you can add to what you're already doing. And yet, at the end of the day, if we can get dollars to perform multiple jobs, okay, if we could take some of our cash flows and grow and own and control an appreciating asset and leverage that asset for the investments or for the businesses or for the lifestyle that we're living, then we're being more efficient with our dollars. So sure, you and I could have a brand new car right off of the assembly line, same make, model and everything. And you could put a toddler into yours and, you know, they would wreck, right? So don't put toddlers in it. But what I'm saying is like how you treat that thing matters, of course. And that's why we're talking about being an honest banker too.
Appreciate that question out there, ladies and gentlemen. Keep them coming. Shout out real quick. Pause before we go back over here to Legacy Pursuit Financial. A great follow, by the way. If you're out there, go ahead and follow that, or you're watching the replay.
He said lots of noise out there.
We're getting to it coming up. But shout out YT. Shout out Zoom E. Shout out IG, shout out TT, wherever you're finding us out there. Isn't it funny how they all like work into my rhyme scheme?
That's interesting.
Everything works into my rhyme scheme.
You're playing it well.
Except Zoom E. I tried. Okay. What's up? Legacy Pursuit Financial asked us, what do you guys think about IULs? Now, if you don't know what that means, let me give you the jargon. Some of you are seeing this pop up. If you are following insurance talk out there, hashtag financial literacy, hashtag retirement planning, you're going to hear about IULs. Jesse, first off, what is that?
Indexed Universal Life.
Okay, Indexed Universal Life. Now, is that different than, you can do infinite banking with that, right?
You could do infinite banking with anything. You could do infinite banking with bricks.
Okay, but do you have guarantees, growth, and cash flow happening for your whole life no matter what in an IUL?
No.
You don't. So, ladies and gentlemen, let me break that down for you. I'll take this one. And I love to show off our favorite 3-cup scenario for this. So in your mind's eye, cup 1, 2, and 3, you got to put them in your mind's eye in front of you right now. Cup 1 is where we give the insurance company money. We start the process by giving them dollars. Premium. Those are dollars we give an insurance company.
Yes.
They always buy something. Car insurance, fire insurance, phone insurance. We pay premium. The insurance company provides us what?
Death benefit.
Death benefit and life insurance, right? In car insurance, it's a payout. It's a policy. It's peace of mind. It's a pool of cash, right? Jake from State Farm shows up like a good neighbor. He pays out. If we gave them premium, we bought a bunch of their money. It's on standby waiting for a loss. Okay? That is a guaranteed payout in whole life insurance. No matter what happens, because there's one guarantee that's not a guarantee in car insurance, phone insurance, and fire insurance. Jesse, what's the guarantee?
That we are going to die.
We have to die. It's guaranteed to pay out. Whole life insurance lasts just about how long, Jesse?
Whole life.
Perfect. You guys got it? That is a guarantee. It's not the same in IUL. We'll come back to it. Also, because we have a guaranteed payout, it's definitely going to happen no matter what. That's cup 3, the death benefit. Our dollars, cup 1, premium, bought cup 3, guaranteed to pay out. Cup 2 is representing the equity of cup 3. Cup 2 is cash value. That's the green cup, cup 2, if you're watching any of our stuff. And that represents how much of the insurance company's money, cup 3, death benefit, might just be liquid and available today. That's what it represents. It's a portion of the whole, and because it's paid up, paid off, or paid for, we've got equity in that big death benefit, we can get to it. That is guaranteed to continue to rise throughout the rest of our whole life. It's guaranteed to be liquid no matter what, and we can get to it. Is that a guarantee in an IUL, Jesse?
No.
No, it is not a guarantee. Now, let's come back to cup number 1. We had to put some money in the game, but now we're back to cup number 1. Premiums in an IUL, are they guaranteed to be the same and consistent? Are they guaranteed to buy us insurance no matter what happens? And are they guaranteed to provide cups 2 and 3 that continue to grow even though we just decided and we know it's not guaranteed. Is cup 1 a guaranteed fixed amount that always provides for the other 2 cups?
Let me answer you in Spanish. No.
Okay, very important. All right, Josh, you got it out there? It's not. They're just not guaranteed. Now, is there anything wrong with an IUL? Absolutely not. Jesse said earlier, you can try to do infinite banking with it if you like, that or bricks, but it's not the most efficient product out there because the guarantees are not there no matter what. Now, what you're probably wondering, if you've heard of IULs or you have one, I'm always getting these questions. Wait, if it's not guaranteed, what is going on? Because I thought it was. So what's happening is the cost of insurance in an IUL is rising. That means your premium is actually guaranteeing less and less and less of cup 3 over the course of time because you and I are getting older. We're getting closer to mortality, and the cost is not fixed to keep the product. Second, the cash value works way differently inside an index universal life policy, and cash value is linked to an outside index or a market index based on, this is what you never hear from the IUL salesman. You'll hear what I just said. You will not hear the rest. Linked to an index, but not in the market specifically. You'll hear that. You won't hear the insurance company bought 1-year call options. And so if it rises, you can go with it. If it drops or goes too low, goes beyond 0, negative, you won't lose. That is a market function that does not guarantee growth and doesn't guarantee cash flow. It's just a possibility. For that reason, we can love IULs and not use them for this. They don't work for what we're talking about. We can love them for what they are, and we cannot recommend them. According to Nelson's book, he also says, do not use universal life products for this. It's not guaranteed to grow in cash flow. We can love IULs for what they are. And what they are is a very, very poor backup for what we're talking about, because the insurance company has let you take risk back from them. And isn't insurance, by virtue of the definition, Jesse, something that we'd like to be guaranteed?
Yes, we want to mitigate risk, not assume more of it.
There we go. Ladies and gentlemen out there on the Cash Compound, TikTok, appreciate you. We got one for you here. M. Thompson, do you pay interest on cup 2? Great question.
That's a fantastic question. And we were just talking about being an honest banker, the third rule, the third principle of infinite banking. So you should is the answer. If you're looking to implement infinite banking, if you're looking to have your own save and spend system, you should pay interest. Now, do you have to? No. This is your asset. This is your entity. You own it. You get to control because the loan is unstructured. So if you take a policy loan, you go out and do something. One of the beautiful aspects of having this private monetary system is that you get to decide when to pay that back, how to pay that back. Do I want to do something monthly? Do I want to do something quarterly? Do I need 12 months of tackling some debt or some item that I financed, and then I'm going to begin repayments back on that to be an honest banker to fill my reservoir back? Because here's the question. Why wouldn't you want to fill it back in? Okay. If you're buying a car, is it going to be your last car, or you're probably going to get another car in the future? Okay. Well, let's begin refilling that reservoir. Let's begin expanding our pool of capital for the next thing, because we'll probably need more next time for the next car. It'll be even more expensive than the last one was.
That's a great set of questions across the board, everybody. And Meximelt says on YouTube, don't the fees eat up the cash values as well? Yes, I actually didn't get into that because the cost of the insurance in an IUL, an index universal life product, not the product that we recommend for banking, because the cost, cup 1, continues to rise, it's going to need in your retirement, which most people are being sold on, that's the most useful time for your IUL. It's going to need more money in it than it needs today to keep going. So either you'll have to pay higher premiums, or it will eat the reservoir of cash that the agent told you you'd have to spend.
The term that I like most that describes that is self-cannibalizing.
Self-cannibalizing.
That hit it home for me.
You remember? Yes, you remember in those. You remember that "Don't Tread on Me" flag from like 8th grade or something, and then those cartoons where the snake starts eating its tail. And then the snake is in a big circle and it starts eating itself. That's what happens. I don't like snakes. I made up that visual on the spot. It might not be a good visual, but that's what happens. Self-cannibalizing. The snake starts eating itself. So how in the world are you going to use the money? That's the point. How are you going to use the money if the thing needs more money and it can eat and will eat the money if you don't pay more? But if you have to pay more, why'd you get it in the first place? You're going to get a new job? You're retired. It doesn't make sense. Okay, so be careful of that. And those of you who have IULs, let me give you something practical. Call us. Link in bio. Wherever you are, get on our link. Have Coach Jesse walk and talk you through your own consideration for an IUL if someone sent you paperwork or the one you have. He'll walk and talk you through to just help you understand on your paperwork what it guarantees and what it doesn't, and if that's the right thing for you. Which, if you're trying to do infinite banking, we're letting you know it's just not. It's just not. The longer you have it, the more risk you assume. Okay, Jesse, we are in need of Principle 4. Okay. Remember, we're doing the banking book report here, BYOB, Nelson Nash's classic. And this is the black book of infinite banking. And it's a big book. It's only about $25, Jesse, but it completely changed my life because of these 5 principles. Tell us about principle or rule number 4.
For sure. So rule number 4 is don't do business with banks. So I'm just going to go ahead and say it. And I'll also say that it might be one of the more, if not the most controversial, because there are plenty of educators, professionals, marketers, great people, maybe folks not doing so great of a job of promoting what is infinite banking. Actually, at the end of the day, my view on it is this, and I'd love to hear your take on it. At the end of the day, because some folks are saying, well, if I can get cheaper money here at the bank, at the commercial bank, then I want to be able to do that and keep compounding over here and keep liquidity. And at the end of the day, if you're doing that with control, because you've built up a significant enough amount of capital in your private system to offset the risk that you have assumed in the commercial banking space, you're still being your own banker. Awesome. Also, if you never walk into a bank ever again and you do holistically, within your own private monetary system, finance your college educations and your vacations and your cars and whatnot for your family, and you grow that out and you scale that out. I was having a conversation recently with one of our coaches. Okay. They've built out a system that spans 4 generations of their family. I'm talking about her. 4 generations with in-force IBC policies. They can do a lot. Okay. So no matter which camp you're in, essentially, I'm saying if you're maintaining control over the banking function in your life, that's it for me. Whether you do business with banks or not, I think there are a lot of big picture reasons why we shouldn't, and we can talk about that, but that's a separate subject.
Ladies and gentlemen, it is so powerful to understand. Don't do business with banks. You are right, Jesse. There's a lot of controversy over this point because banks can be convenient or helpful or potentially sell you their money, borrow from a bank, you get a loan, sell you their money for a low interest rate, especially if you have some leverage power, right? You've got some real estate, you got some businesses. Heck, the bank may loan you as much money as you want at 2%. Here's what you don't have. My friend Caleb Williams, who wrote the And Asset book, to help you understand that whole life insurance built as a banking or cash flow tool is the and asset, not if, not either or, but it's the and asset. Here's the word, the one word, control. If someone else is in control of that financing, you don't have the control you're going to want and need for flexibility, for future unknowns, for payback schedule. That's the word. So, can it be convenient? Do I know some great people who utilize banks, line of credits, off of their policies even? They have policies, and they give it to the bank, collaterally assign it, if you know those big words, and now the bank really gets that benefit, but you can utilize the cash flow from a line of credit from the bank, like a HELOC, sure, but not the same control power. That's really the thing. So I'm not going to get into that any deeper, I guess.
That's fine.
I personally do not utilize a bank line of credit. I don't borrow from banks. I've never actually borrowed from a bank, ever. It's weird, huh? I'll be 40 next month. I've never borrowed from a bank.
I'd made some bad choices.
But in my policies, I borrow from them all the time, and I've got outstanding loans. I got loans I'm repaying right now. I got outstanding loans because I control it, so I get to decide.
Right. Well, I always think of one line from Robert Kiyosaki when he said, banks loan you money when you don't need it.
If you can prove that to them that you don't need the money, they'll loan it to you.
Isn't that wild, though?
Yeah, it's an interesting thought.
It's so wild. So you want to go to the 5th one then?
Let's do that last principle. Once again, ladies and gentlemen out there, each Thursday, 3:30 p.m. Eastern time. A couple of coaches go live on the Cash Compounds platforms at the Banking Bros or the Cash Compound, depending on how you found us. And we walk and talk you through an Ask Me Anything hour. Ask us anything about the infinite banking concept, how to save and spend money, and how to get control in 2024. That's what we're doing right now. And we're doing a banking book report where we're overviewing Nelson Nash's 5 principles in his book, Becoming Your Own Banker. We're on the 5th one right now. Jesse, why don't you tell us what it is and walk us through how it works?
Yep. So the 5th principle is, if I can get this right, to rethink your thinking. And you could kind of go a few different ways in that, but rethink your thinking. So remember, this is about the infinite banking concept. So really the limitation here is our imagination. Yes, we've talked about the product. We're certain that we know what the ideal asset is to use for the product. Okay. We've talked about the principles. We've shared these 5 principles here with you today in answering your questions and such. And we've talked about the process. You know, you see that when you see the 3 cup setup. So the process in rethinking your thinking. Number one, I think for me, you know, here we are at the beginning of a new year. I calculated how many books I read last year. Like at the end of the Becoming Your Own Banker book, you can read about the dozens and scores of books that our Nelson Nash read and that he recommends. So one thing that I think is that we should always be expanding our thinking. You know, there's that saying about a closed mind can't learn.
Right.
So I think we should always be learning. I think we should always be having these discussions, you giving your best practices, me sharing my tips and pointers, and us answering folks' questions and getting things dialed in. Because we don't have a cookie cutter approach either. You're in a particular situation. You're in a particular situation that's different from mine and Jay Do's.
Right.
So we should just always be open to rethinking and growing and expanding what it is that we're doing.
Rethink your thinking is very important, ladies and gentlemen, like you said. And I think at the beginning of the year, when we all look at 2024 as a clean slate, right? 366 days, we're down to 362 days or so at this point of a new opportunity to develop new habits, to think new things. It's a great time to do so. I think some of the most successful people out there, and I'm trying to be one of them, actually have a little twinge of excitement when they're wrong because they know they're getting closer to the truth. Think about that.
Sure.
They have an excitement when they're wrong somewhere deep inside of them because they're searching for the truth and searching for principles they can live by rather than stuff blowing in the wind. So we're going to expand our mind and expand our system of capital with these types of policies. Now, one way that Nelson talks about that is expect a windfall. You mentioned earlier one of our coaches. She's in Florida, and she has 4 generations of policies already at this point. She knew Nelson. She'll be teaching this in the future, so sign up for a further explanation of this, or if you're just joining and you missed it, click that link in the bio and get ready for new opportunities to learn the infinite banking concept. She
and you also recently did an interview with Miss Robin Washington.
did.
You can find that on YouTube.
Good call. Yes. So on our YouTube channel, you're going to find a conversation that I had with Robin. Okay. So that is the coach who has 4 generations of policies, but expecting a windfall. Remember, this is a perpetual motion machine because the insurance company getting your dollars is going to create bigger pools of money that can keep going and flowing it through your family. Big deal. So when we rethink our thinking, we're able to expand our mind and keep the system going forever. What if dollars that came into your life, ladies and gentlemen, boys and girls, never left? Jesse mentioned earlier that you gave them a job, and that job was to kick off more cash for you, really. Kick off more opportunity for you. Kick off more loan capability so you can make your dollars turn into a bank for you. Loan them out to other people and get more money coming back, right? That's what you're able to do. When you rethink your thinking and you develop a system of policies in this way for infinite banking, you're going to expect more and more money coming to you. It's just going to keep coming. It's really wild. So the longer you have it, the more you'll understand it. If you want a one-on-one cash consultation, we give away free consultations one-on-one. Please click the link in the bio wherever you are, below, on the side, above us, or the replay. What you can do is you can get on a phone conversation. We're going to put Jesse's link here and there and everywhere we can, because this year, Jesse, you're walking and talking through a bunch of new people's opportunities to start the system for themselves, right?
That's right.
Jesse, I expected you to say more. Okay, Jesse, we have a couple more slides for those of us who might be out here in the Zoom world following along. But let's punch through rather quickly. Jesse, I'm going to turn things over to you for the next few minutes and punch through a couple of those things here as we test out our slide deck.
Yep. So why insurance? Again, we've talked about the principles. We presented a case for those, I believe. You see the process often from us in the 3-cup setup. And so back to the product. Why? And there are folks, I've seen some things on here. Folks have been asking about IULs. Folks have been asking about MPI and different things. There are more than a dozen reasons why I believe that properly structured whole life insurance with mutual companies is the ideal asset. It's private, you have control, it's easy to manage. There are lots of tax advantages, more than a dozen, okay? So that's why insurance. Let me go back to something we were talking about earlier. You referenced, Jadu, how we insure our cars.
Right.
We insure our homes. Now, whose homes and cars are those?
Ours.
Mine and yours.
Yes.
Okay. That's very important. I know that sounds so simple, but they are ours. We're not theirs. They are ours. We got them for us, right? Okay. So the second thing is, which is more valuable, your car, your home, or yourself, your own person, your life? It's preposterous to me when I think big picture that someone would insure their car. And maybe there are those folks out there that they're going to do the bare minimum. Okay, they only have the car insurance because their state requires it or whatever. And something like life insurance is not mandatory. Okay. But it's the one thing that we could be doing. It's the one thing that in this world we could have financial guarantees to ensure that I think outranks cars and homes and phones and such.
That's a good point, Jesse, that I hadn't thought about. And of course, there's value in the marketplace and there's liability in the marketplace if you mess up with your house and car. There's liability to other people. There's liability insurance, right? There's also comprehensive. We know those terms, the part that you have to pay, the part you might pay to other people. But when it comes to your life, people are not valuing it monetarily by buying enough insurance. They're underinsured. I know this is crazy talk to half of you out there because I wouldn't have understood this before I got started in the infinite banking concept myself 9 years ago. But you're exactly right. I'm more valuable than all those things, and I'm a bigger liability to my family, friends, church, and charity if I'm not there. They have to go provide for themselves or find another alternative. I have human life value, so I need to be covered.
Yep. Just imagine a scenario where the car's covered and something happens to the car, and it is covered, so it's going to be replaced. But in that same person's life scenario, they're not covered. That's wild to me.
Right, and the car's covered, and then you get lost, you die. The car's fine, but the car has no value if there's nobody there to drive it.
I'm telling you.
Yeah. Okay.
So there are more than a dozen reasons why, but that's why properly structured whole life insurance in a nutshell. I will encourage you, if you can see this screen, and I'll encourage you verbally to check out, there's a Nelson Nash documentary that you can find on YouTube. It's a documentary about the guy who wrote the book, who came up with this idea. So we had a little clip right here, and hopefully I can just jump right by it just by referencing you to go check it out in your own time. I think it's really cool to get a little bit of an insight into the guy that came up with this whole idea.
Right. Let's continue with the process, right? We talked a lot about the product, maybe a good 40 minutes, and many of you are new, but repaying loans, Jesse, help us understand how we use this bad boy for banking.
Sure. So that was one of the principles that we covered too, was being an honest banker. So if we borrow from our private monetary system, just like we would from a commercial bank, we would pay a commercial bank interest. Actually, there would be a lot more on the line, right? There might be collateral involved. There's certainly going to be a rigid term and condition set, right? There's going to be all kinds of stuff, application process and timing. When could the loan officer meet us? Whatever, all that kind of stuff. But if we would pay back interest to a commercial bank, that commercial bank is a business, by the way. I don't know if y'all know this. In my town, it's probably the same as yours. Those are not nonprofit entities. They are for-profit entities. So if we would pay them interest, I'm going to say we should mimic that in our own situation and pay ourselves interest. Because, again, why use this private monetary system? For the things that we want to do. Okay, so do we want to do more things in the future? We need to be adding more capital and expanding our pool of capital as we go.
What's up, Tony Shavers? One of our favorite guys out there proselytizing for us. Tony reminds me of our Facebook group. Ladies and gentlemen, we have an FB. We're not live there. We're live on YT, CC, OPP, and all that stuff, A to Z. But our Facebook group, if you click the link in the bio, you can join that, ask questions in there, and we give a lot more great, rich content. Of course, it's free. It's a Facebook group. You don't have to have a policy. You don't have to love us only, but you can join that out there as well. Appreciate you following out there wherever you are. Several questions. Let me go through them quickly. What's up, Mexamelt, out there on YT, our YouTube channel? How is the whole life structured? 40-60 PUA? I have 9 years until retirement. 3 different questions all built into
Somebody's been doing some homework.
Yes. Okay. So number 1, we're going to use a mutual insurance company to buy this whole life insurance product from we've been talking about that pays dividends every year. And the favorite company we just came out with their dividend statement. 146 straight years of dividends on top of the guarantees. Lots of growth. They're going to add growth and value and money they'll add to your policy. We love them. But everybody we broker from 5 different companies, have paid dividends for at least 100 straight years. Okay?
That's right.
The structure of the technical structure of your base premium and PUA typically, and how you'll read it in Nelson's book, that's what we're talking about. You're going to see 40-60 and you're going to see 35-65. So XML, we're going to normally customize. Jesse, that's an oxymoron. Normally customize.
I'm listening.
Just like that, XML. Yes. Okay, so that's what you're going to see inside his book. 35-65 examples and 40-60. We have a typical 40-60 structure unless we need to change it or you've got great reasons that we can change that structure. Most of you don't know that technically what that means or how it works. I just wanted to make sure you understood that and get the question answered. But so many people are new, they don't know what that means.
And there's so many questions that need to be answered, and they would be in a consultation call or calls so that that policy would be properly structured for you.
Yeah, I mean, I've got a 70-30. You would do it differently maybe on minors. Lots of good reasons to do it differently on a minor. Your situation, third part, I have 9 years until retirement. Lots of reasons because you're close to retirement that we might manipulate a standard structure to be in your best interest. But we'd have to know more things. How many years you're away from retirement is one of those things. Great point. It's not the only thing, but it's a great point and one of the things. Appreciate you. Do you have policies? Have you gotten a consultation or one of us, your coaches? Of course, I don't know your handles out there. I know some of your names, but I don't know your handles. We got several great coaches on our team, so hopefully you click that link. Okay, and over here, Asian Ray, what can I get a good life insurance with a felony? Yes and no. We don't decide. We're not an insurance company. We're agents. Okay, so what we do is we make a case. It's literally called a case when we put it together and hand it to the insurance company, and we ask them, are you willing to underwrite and take on the risk of this person? This person might be old and young, 36, 24, 36. Well, only if she's 5'3", they might say, okay? Maybe you're 800 pounds, maybe you're 80 pounds. We have to ask them, okay? Felonies, prior felonies are one of those things that make it questionable, yes. But what the felony was, how long ago, whether or not you've been pardoned, which happens in some cases or a lot of cases really, is all relevant. We got to go ask them on that. Agent, what's up? Doesn't this all depends on how good the agent is? No, it depends on what the agent does and the policy says in the contract. Not how good the agent is per se. All God's children are all right out there. The question is, how was the policy structured? What did it say? So in that case, yes, it depends on how good the agent is.
We don't underwrite the loans.
We definitely don't have anything to do with the loans. The insurance company guarantees your use of the loan money. Okay, so just to make sure you understand, we'd love to walk and talk you through that. I've seen you before though, Agent 89, and I think you've been around before. So hopefully we've got those questions answered for you specifically on a call, because I think I've seen you somewhere before.
Awesome.
Okay, talked about cap rates. User 974, if you're still out there on TikTok, what's up? There's no caps. There's guaranteed growth in whole life. Every 2 seconds, we answer another question about IUL. We're not using IULs. They have indexed style returns or lack thereof. Caps, no caps, spreads, participate. That is not involved at all in a whole life product. Non-existent. Just get guaranteed Net cash is on the paperwork. You can see how much cash it'll be no matter what else happens. You can see the cash that they give you. Doesn't matter what else happens, and it always goes up. Guaranteed, and you can get to it. All right, Jesse, keep us going. We're running low on time.
Fantastic. So there's a question on this screen about who is IBC for. Again, I think this is one of those controversial ones, but here's my answer. I say philosophically that IBC is for everyone because I think it's the superior way to reacquire and profit from the banking function in your life. But here's the realistic answer. It's not for everyone. Firstly, because not everybody has ears to hear. Right? It's out there. It's possible. Banking's not new. Whole life insurance is not new. Doing it this way for yourself, that would be new. So the ball's literally in your core. We're here educating on the product, on the principles, on the process. But at the end of the day, you have to wrap your mind around these concepts and decide whether you want to adopt them or not. So that's what the realistic answer is that no, IBC is not for everybody.
Love it. Okay, I'm just taking some notes here. We're looking
Absolutely.
at slides for one of the first times here in the new year. We're going through our banking book report on Nelson Nash's classic, The Infinite Banking Concept book, Becoming Your Own Banker. And I'm getting some good nuggets. I got some good stuff from Jesse.
Good, man. What was your thought on that IBC? For
well,
everybody?
you gave us an alliteration, the product, the process, and the principle.
Yeah, that's
what we're talking about
well,
here.
and that's not the first time I've said that. I was laying that. That was an alley-oop.
But I was like, but we're building a master class too. And I was like, oh, that's a section of the master class I need to put in. I've got the product, the process, and the people, like the agent or the person who owns it. But
philosophy. Listen, there's several more. All right, I'm gonna quit. I'm giving him material now.
Okay, let's keep it going, Jesse.
But perpetual productivity. I'm stopping. Another screen here says, how does life insurance help you create wealth and see opportunities? I would say in the short term, it creates a bank that you use for the things that you're doing in life.
Yeah.
Long term, for those that are real legacy minded, it's a way to allow the next generation to have a completely different starting point than we do. Because at the end of the day, since we are using whole life insurance, there is going to be a tax-free transfer of wealth. It's going to be that windfall that JD talked about earlier to the next generation, or church or charity or wherever it is that you designate that. But again,
austerity,
tax-free.
Austerity. Keep it going, Jesse.
Yep. Okay. Next screen. Again, there are some short videos in here, very valuable. I've watched this more than one time for myself, that documentary that I was referencing. Don't Steal the Peas. You can't reiterate that enough, but we have covered it. Yes, sir. The arrival syndrome. Okay.
Ooh.
Again, right here at a new year. Okay.
Yep.
We had a lot of habits last year, some good, some bad. We had a lot of tendencies. We had a lot of experience. Again, some good, some bad. The arrival syndrome is the idea that, well, I've reached the peak. I know it all. I already know that, or I already do that. And I'm just saying we really need to ask, but do we though? Are we though? Okay. Just being open to reprimand, reproof, just being open to growth. We talked about reading a moment ago.
Yep.
You and I were talking about some habits earlier and some things that we might adopt this next year. Just being open and staving off the arrival syndrome.
There's always better that we can do. There's always more that we can achieve, because one thing is that it's not always the answer. The answer is not always inside of us. We can use products, tools, and leverage. And in this case, that's what we're doing. We're leveraging a product and tool outside of us to make us better. We are our greatest ideal asset. This is the second place. The ideal asset for our productivity and the process of banking is this policy. We're telling you, it doesn't get any better outside. Hold on, which song snippet did we use? Maxi Melt out there. Keep going. Jesse,
making somebody laugh. Good. I'm glad.
Yeah.
He must have heard a couple of seconds of the video that I started to play.
Was it
which
that,
is fun?
or was
I
it
guess
me, or
that's the
was
only.
it?
That's the,
Sometimes we slip it in. We go live a lot. Jesse and I do lots of lives on TikTok, actually. So we slip in stuff all the time. So we're going to work this entire presentation that we're giving you guys today into probably a 2-part series. We're kind of going through as much as we can here. It's been 1 hour, so let's just keep going. Jesse, I'm going to let you see if we can kind of punch through in the next couple minutes.
The next
what is
one's,
each thing? Yeah.
The next one is Parkinson's law. So Nelson addressed human problems that we all confront. So here we are in a new year, just like I was talking about last year. So Parkinson's law, it's not something that gets beat one time and then it's done. It's something we constantly have to confront. So Parkinson's law says that we tend to spend all that we earn. It's just a natural human tendency. We tend to take as much time as offered to us or allotted to us. We tend to spend all that we earn. So that's something that has to be beaten every day. Now, there are infinite number of things, excuse me, there are an infinite number of things that we can do with a policy. This is the infinite banking concept. Here we list out some things just to provoke thought. Okay, so I'll list some to you. Cars, homes, education, business equipment, business purchases, emergencies, investments, real estate, vacations, debt payoff, taxes, home improvement. Wow, I've done so many of these. Medical bills, weddings, gold, silver, precious metals, crypto, retirement, funeral. We were just talking about retirement a second ago. This could certainly play into your passive income years. The list is infinite.
Love it.
Again, we recommend the book, Becoming Your Own Banker by R. Nelson Nash.
Ladies and gentlemen, we're going to let you go out there. Give yourself a round of applause and hand clap. I think some friends out there, maybe like Joshua Rose, Legacy Pursuit Financial, a great dad out there as well. Appreciate you being here. Corey Sanders, appreciate what you said. IBC is life-changing. Appreciate all of you. Hey, we love you. We're out here trying to reach. We believe we can preach and teach. So that's what we're doing. We're trying to help found people find people, right? We've heard that cliche out there. In 2024, we hope that you learn to save and spend your dollars. Utilize this book as the foundational wealth library resource. Save your money, keep it, and spend someone else's. We still have to spend money, so let's put our money in the most efficient place and pay yourself first. Shout out to all my friends on TikTok. Appreciate you following the Cash Compound. Make sure you follow, okay? He's a great public speaker. I think he is. Yes. I have a feeling they might be talking about me. I don't know.
Yeah, they're talking about you.
Maybe you. Maybe you. Remember, you can get a free consultation by clicking the link in the bio, wherever that is. Go to our saveandspendsystem.com to watch our full 60-minute presentation where we break down our approach to the numbers of Nelson Nash's IBC process, the concept. We'll get into the numbers on some policies that are just like the ones you can get as well. So we want to help you guys crack the code to cash flow. Appreciate it. We are out. We are out. Mom, couldn't get me. I'm done.
See y'all.
All right.